But also Bitcoin rejected off that reverse mean perfectly. Boom, just like last time. This time, drop a little quicker. First 2 weeks here, not as bad. Didn't get down to the 95.4 Laplace. Boy, it did this weekend. It did this weekend. Pretty much did a 1SD move. Last week's candle. Over the weekend too, right? We had a little action over the weekend. There's some good trading it looked like. Let's see here. But yeah, we talked about this. This whole drop, right? The rejection off the reverse mean here. And people, if you're listening to this for the first time, all our indicators are based on math, probabilities, volatility, entropy, probabilities and statistics, okay? The VEPS. When it comes to trading, is what people don't understand is this is all probabilities, right? You've got these high frequency trading firms and their algorithms. Do people really think that they're using traditional TA to program these? Because they're not. Trust me. Well, I mean, what is an algorithm anyway? You think an algorithm's messing around with a 21 EMA, or a 200 SMA, or a Fibonacci? No, man. Come on now. This is why we use this stuff. And this reverse mean of log returns is pretty powerful. We looked at this before. Last time we rejected off the reverse mean here, all right, the 48K high. Pretty sure. What was that drop? 60%. Let me see here real quick. Let's get a quick little read. Yep, 63%. So I was looking, if we go from the top here, see what 63%. Yeah, we talked about this at the end of the week. A little under a 10K Bitcoin. Are we going to see that? We're about to find out. And why do I say that? Again, all probabilities. All right. I've got projection models here. That's what you're looking at. You're looking at Laplace distribution projections. This is going to give you an idea of where the price action is in the distribution of returns. And right now, over the weekend, like I just said, we literally closed below the 95.4. But when we opened up that new candle, all right, we're back up above it. This is what I like to see. So what's an important area? What's right at the 95.4 Laplace on this projection from 2 weeks ago when this dip started? The 68.3 Laplace on the weekly. It's a little pink dot right on the pink line right there. So it's going to be interesting to see what happens when we get down around 19. Boy, he sounds pretty confident that we're going to go to 19. Yeah, I'm real confident. So do we get a bounce here? Do we close this weekly candle? I'll tell you right now. We closed down here below this 95.4 this week at the 1SD. We're probably going to make a run at 9.7. And this is going to drop to some prices where people are going to start freaking out. Why freak out, right? Are we accumulating down here? Hell yes. Do I want a 10K Bitcoin as a holder? It makes you makes your nuts suck up in your sack a bit, but I will accumulate down there. I'm not afraid of low prices. I don't care how long you've been in crypto. If this is your first bear market, enjoy. It's fantastic, right? We all love it. This is why we trade the way we do at Alpha Trading. We don't care if the price is going up. We don't care if the price is going down. Bear market, bull market, all bullshit, right? There's buyers and sellers. Most of the time, those buyers and sellers are the same fucking people, these big firms. Retail traders are pushing this market around. Okay, these big algorithms are. And retail traders get left in the wake and get wrecked. That's what we see continually. Since I've been in crypto since 16, I've seen it over and over and over and over again, right? There has to be profit taking in this market. If you're not taking profit, Bitcoin is going to suck every last little bit of juice out of your life. Take it all. Be careful out there.
Very true. Very true.
Yeah, it'll suck you dry.
Greed is not good.
No.
Yeah.
That's the biggest problem with a lot of traders. You can't be greedy, right? And if you're going to be greedy, look at it like you're the little greed machine, right? We've figured out a way to get a little insight into these algorithms, into these 7-figure algorithms, right? People, that's why. If you're out there and you're looking for a trading bot and you're going to buy a bot for $500, $1,500, $5,000, do yourself a favor. Don't. You're going to get wrecked, right? Because there's going to be a $50,000 bot that's going to trick your bot. There's going to be a 100,000 bot that's going to trick that bot. I mean, it just goes on and on and on. You get to the top dogs that are really pushing the market around. And you see every day, you see hedge funds go under, right? Does that make any fucking sense at all? They're a hedge fund. You're supposed to know what you're doing in these markets, and they still don't, especially in crypto. So take your profits. Take your profits. I was talking about when we got up here, when price action was down here at the lows, 17.5, I was screaming from the bell tower. Returns are going to mean revert. Price action will follow. Did it happen? Yes. Now, why did I say that? This price action down here was quite a ways away from the reverse mean. Log returns mean revert. It happens, right? We don't question it anymore. We know how these markets operate. And so now, as this journey to the top, and look at all these wicks, it was a rough ride. Do you know how many retail traders got wrecked trying to trade this shit using traditional TA? A lot. A lot did. The whole time, we're waiting for the returns to mean revert. I wanted to see what happened when price action followed those returns right to the reverse mean. Were we going to reject like we did last time? Or are we going to close candles above? Start making a move to the top side for new all-time highs? Doesn't appear to be ready yet, but Bitcoin will shock at you. That's what Bitcoin does. It gets people in really bad positions thinking something and then will do the exact opposite. We've all seen it happen a million times. So will it find support here on this 95.4 Laplace after it touches down here at 19K, which is a high probability it will, right? Why? Price action loves to vibe in between that 68.3 Laplace, especially the higher time frames you go. And I'm waiting here. How many more days we got? My God, a couple. Yeah, I think so. We got 3 days left. Pull out my calendar here. Jesus, I'm a little behind. Yeah, with today, 3 days. So then we're going to get a new monthly candle. I'm telling you right now, this is going to be real interesting. And now, considering we're back down here at 19.9, let's throw this on a monthly real quick. Almost did a 1SD move on the monthly. Okay, almost did a 1SD move. What do you notice right off the bat, right? You got a candle, you got a refill here. Yeah. Boy, it started looking real good, but you can see this is just 3 months ago, right? We dropped below the monthly reverse mean. So now we're back down here. I mean, I'm not gonna lie. This market could get super ugly, especially, right? I mean, there's so much bullshit going on with the financial markets in general. I'm telling what's
Put another way, this market can get super profitable for people shorting.
Yeah. Oh yeah.
Yeah.
So here we are, right? We're below the mean on the monthly and the weekly.
Any new people listening to this, if you have any questions, feel free to ask questions in the chat channel, in the stream chat, or speak up here.
There we go. Here's
Sorry, I didn't mean to interrupt. I just want to let them know if they're not watching the channel.
Yeah, you're fine. Like you can see right here. I mean, you can just see how price action just following the returns. Mean reversion. People are like, what's that silly line? That's the mean of log returns. You're going to see price action mean revert continually. Mean reversion. Mean reversion. Mean reversion. Now, where are we? We're out here with our hat in hand again, dancing around out here. Let me throw this projection back here on the daily. Yeah, let me start one back here real quick. Hold on here. There we go. Pull this beautiful baby up. First, I want to start one back here. 16 bars for PB2. Line this up. Yeah, below the 95.4 there. And now I'm going to back these up a 1 just for the recent daily here. Yep, 4. So this on a 4. Have a good look here. What we're doing on the daily. Yeah, we were below the 95.4 on this projection from pretty much beginning of the month. Or Jesus, sorry guys, the middle of last week, sorry. Or actually Thursday. God, I'm losing my mind here. You know me, I've always got this on a weekly chart, so yeah. But we opened up the new day below the 95.4. Boom, we're pumping back up. But look at these wicks. I mean, we're below the 95.4. We're sending wicks up to this area right here, and it's rejecting. So I'll be watching this too, just to see, because what's going on? We had mean reversion, right? What happened when we crossed down? Went to the bottom side of the mean, right? It's running. But now look, here's the reverse mean. Returns mean revert. Now, one thing we can't tell you is when. We're going to go down a little bit, then we're going to come and mean revert. We're going to go sideways. We're going to shoot up, have one of those $10,000 days and mean revert. We're just going to go sideways all the way out here, right? That's what we don't know. That's where all the other charts come in. And when it all gets down to it, I'm on a daily time frame. I was looking at a weekly time frame. I was looking at a monthly time frame. Realize I want to see where the reverse mean is. I want to see where those current candle levels are, and I want to see where price action is within the distribution. Am I trading this information? Absolutely not. Why? Because I'm down here trading. 5 minute, 3 minute, 1 minute. This is where we trade. None of that matters up there. People like to talk about the macro. Hey, I can guarantee you one thing. Out of all these guys out here talking on YouTube, trying to tell you what's going on with these markets, we are going to be able to get to the closest, what's the word I'm looking for here? We're going to give you the closest read to these markets than you're going to get anywhere because of the way we trade, because of the way our indicators are built, because we know the price action is going to follow the returns. Right? This is what the average retail trader has no idea about. You could ask 9 out of 10 don't even know what returns are. And the one that does know, they don't even really probably know what the returns are. We did.
Well, they know half the story.
Yeah. You're like, returns? What the hell are returns? You know, and it gets confusing for people. It's exactly what it sounds like, right? It's just a return on your investment, really. That's why we use the divergence between returns and price action. That the more times you watch these streams, you're going to start to realize what we're talking about. If you're a divergence person and you're using traditional TA for divergence, stop what you're doing. You need to be using divergence that makes sense. We're talking about returns and price action. That's what makes sense. Because that divergence is really going to tell you the return on your investment's diminishing. Take your profit. And this can happen down on the 5 minute, the 3 minute, the 1 minute. This is why when you do the hardest part of trading the way we trade is literally you're not a bot, right? We're not algorithms. We're humans trying to run with the algos. You have got to be good with your exchange operation. There's no doubt about that. That's the hardest part, right? You got plenty of spare time. You can study these indicators. You can watch these streams. It'll start clicking. You'll start to see things. Especially if you're in this stream, you're obviously interested in trading, right? You have a passion for it. What kind of psycho sits around on a Monday morning and watches this crap? Right? Obviously, you have a passion about this. So just like you learned traditional technical analysis, this will come as well, right? You just got to give it time. And I'm telling you, if you're here for a reason. Don't give up. Right? Because you're going to kick yourself if you do. Just continue. If you've got that pro chart, Continue to look at the volatility, right? And how the expansions and the contractions work. Get a little insight into the divergence using that ALR, right? So all you got to do is stick with it, right? Watch your streams, study the
And
indicator.
notice how the AVQ indicator calls really, really good, significant moves. It's really good at catching long moves.
Oh yeah, it's good for long term time series and low time frames for sure.
Yeah, like when you're starting out, the AVQ can really be very helpful to be in on a move and not get not get cold feet and jump out of the move when you shouldn't.
Yeah. Yep. And then once you learn those basics, hey, you're good to go. Gee, anymore, I used to preach it. Understanding, right? This indicator, this is the AVR. This is the upgrade to the AVP. It's got a lot more information, as you can see. Like, what the hell is that? I know what every one of these lines is, what every one of these lines is telling me, right? All these correlation breaks. This is not the easiest indicator to understand. Hey, if you're a serious trader, you can jump line, right? You can get our big package of all these indicators. You can start to learn these, right? I mean, the more time that's passed and these coder wolves have continued to put out these indicators, you guys remember what my charts used to look like. It was plastered volatility, right? 3 different lengths like I have on the pro chart. But now
and that is still a very easy and good way to learn it. Like that's really a solid way to learn to read different lengths, and then you understand why combining them into one indicator like this makes it just more efficient with space, but you still understand what all the lines are.
For sure.
Super powerful.
I mean, these days, I'm using entropy more than volatility. We talked about this a long time ago, that entropy is going to right the ship. It's going to shock everybody how powerful it is. People are like, entropy? What the hell are you talking about? You an engineer? I mean, what's happening here? It's like, no, yeah, trading engineer. You figure out how powerful entropy is, because what's the most important thing on these moves? You want to know if it's trending. That's what entropy does. Is the market trending? Is it random? You can get powerful moves when the market's random, but you damn sure know, especially the way we've added our predictor, when you start to drop in the trend, it is a no-brainer. It's a no-brainer. You're dropping in the trend, the predictor's telling you to the top side. It's a no-brainer to get in these moves. And we're talking about scalping this market, literally, right? That's what we're doing. We're down here on these low time.
Just look at that exactly where you are on this chart. Like, look at that latest trending move on entropy to the upside. It gave a signal, or it gave an indication, at least a whole candle, maybe even more, and to be in on the move before it popped up to the upside. It's very clear. It's very clear, and it's on every single one. Like, it's not like it's occasionally here and there, or 80% of the time. It's every single time.
Yes. And I'm surprised there was literally zero divergence on that move on any indicator. So the thing that I'm looking for, you can see the volatility expand, same time it's dropping in the trend. And then I'm looking over here. What sticks out? Yeah, I mean, this is my favorite indicator. Just variance. That's all it is. It's just variance. Variance is a spread of data around the mean, right? And when you correlate that variance to price action, it gives you direction. Is this in a book somewhere? No, we created all this, right? You're not going to find you're not going to find anybody talking about correlating these indicators to price action. You're going to be hard pressed to find anybody using variance or volatility percentile or entropy or returns oscillator or a Z-score. This is where we're at.
And they're certainly not going to tell it to you in a friendly way.
No.
They're certainly not going to want to tell it to you in a friendly way, because they don't want you to know. But we do.
That's why you can look up these terms. You can find the definitions of all these terms. Go find somebody teaching it. Good luck. Good luck, because there aren't any. The people that use this, the people that are programming these algorithms with this information, they're not sharing it. Why the hell would they? You know what they are doing? They're part of the scam. They're pushing traditional TA onto their liquidity pool. That's what they're doing.
Exactly.
And then they are just gobbling up retail traders, lesser algorithms, right? Startup hedge funds think they got it figured out. Boom, they're gone that quick. I mean, these are massive firms with massive algorithms trading massive amounts of money. So,
You know what? Perfect example. Perfect example was Wall Street Bets last year, right? When they had that big short squeeze that everybody was talking about on the meme stocks and AMC and all that kind of good stuff.
right.
Ultimately, what was it that brought it back down, other than shutting off the ability to, for like the retail investors to actually trade it? Was once it pulled the Six Sigma move, right? And even the CEO of Robinhood said this, like in an interview, he's like, "Well, it pulled a six standard deviation move, so they pulled it down." I mean, it's just flat out. They use the returns, they use the math, but like he didn't mention what that means or anything. He just said, "Oh yeah, we did. It was a Six Sigma move, so it was only natural."
Yeah.
Down. No explanation of what that meant to anyone. The guy that was covering it didn't know what the hell he was talking about.
People are like, what
Went
the
right over everyone's head. They're just like, "Yep,
fraternity?
exactly," because we saw that on the charts.
Why is he talking about fraternities?
Right.
What the fuck's happening there?
Right. Exactly.
Yeah.
Yeah.
People,
Yeah.
they will talk about it. They're just like, what did he just say? It's like, hey, go to Alpha Trading.
Right.
That's all they do. But this is what we're doing here, right? And you take a simple indicator like variance. When data starts to spread away from the mean, it's positively correlated. That's why it's blue. And the variance itself turned from white to pink, telling you there is a statistical outlier, right, happening. What is that? It's a fat tail event within the distribution. Second standard deviation move or more incoming. I can throw a projection on every freaking one of these outliers, even the smallest ones, and you will see a 95 Laplace, at least a second standard deviation normal distribution move, which they're usually pretty close together.
Right.
Anyway. But you will see it on
Yep.
all these moves. And people are like, well, why'd that move stop? Why'd this move stop? Why'd that move stop? Why'd this move stop? Boom, boom. Why does the market do this? Number one, it's all buyers and sellers. We got to remember and where are these algorithms operating? Down here, 5 minutes and below. Hell, they're not even on the 5 minute. They're down here, 1 minute, 30-second charts, just hammering trades, hammering. And then you've got retail traders trying to figure this mess out. Well, is what we do. We are able to recognize what these algorithms, what the divergence between those returns and price actions are telling us. And we are able to pick up the crumbs from these massive algos, right? They're dirty, messy little beasts. They're leaving freaking profits laying around everywhere for us to grab. So we recognize what's happening with the variance, the divergence, the entropy. Is this a trending move? Is the volatility contracting or expanding? We jump in, we take that trade. They're no-brainers. If you start to see an outlier on the variance, it's a no-brainer. Take that trade. Take your profit. People love to get in trades, and for whatever reason, they don't know how to get out of them. Hey, newsflash. If you just shorted this move, put in a limit buy, take some damn profit. Get out of the trade. But people see a move starting, they're like, oh, here we go. Now Bitcoin's going to 5K. I'm going to get rich off one trade. It's like goofy. Trade. There's trades all over the place. Put your chart on a 1 minute and just go, holy shit, if I could figure out how to trade all that ebb and flow right there, I'd be rich. Be like, yeah, that's what this is all about, right? It's all about money. We don't do this for fucking fun. That's for damn sure. That is for damn sure. I have lost hair. My hair has got grayer. Everything about it.
Yep.
Fucking trading. Do I have fun when I'm doing it? Yeah, but it's taking a toll on you. Trust me. The whole key is to make that dollar so you can fucking retire. That's what it's all about. Nobody wants to work, for crying out loud. I want to enjoy life, not trade hours of my life for pennies. So here we go. Here we are. And this is what we put together for everybody, right? And we had the Discord closed off for a long time because people that don't understand love to come in and troll. right? Here's the whole problem is a lot of those people that used to do that finally realized that we were the ones that were right the whole time, right? That the moves we made in the past were right the whole time. That's why they're not here, right? There's nothing to say because their whole thing is it just fucking an avalanche happened. So here we are. The dust settles. Who's still here? Alpha Trading is ready to share this information. You will not find anybody else sharing it either. That's what people need to realize. Why are these guys doing this? Right? Well, it's not their if this was to sell our indicator package for $99 a month, we'd be beating a fucking drum and have advertisements everywhere. We don't do that.
Yeah.
We don't need to do that. We're not looking for just average traders. We're looking for experienced traders that are trying to crack this code. That's what it's all about. The algos and the big money are pushing these markets around. If I can figure out how to crack this code and see what they're doing,
who are serious and want to learn this.
Yeah. So those are the people that come. That's why we're not beating the drum. We don't want a whole Discord full of totally new people that have never traded before. Although I would rather take a brand new trader that's never even hit a green or red button. I could teach them this so much faster because there's no garbage in their head about traditional TA. Because the biggest problem is you'll start to try to use this stuff. You'll start to try to analyze trades and something might confuse you. Right? There might be a move starting and you're not understanding what you're seeing on these charts. So what do? You revert back to your old ways. You'll go back and you'll look at your moving averages or the RSI or whatever, which is useless knowledge. Useless. You've got to understand what's happening in these markets. And if you're not following the returns, you have been misled. And there's a lot of people out there misleading traders. For profit.
Sure.
Everybody's like, oh, but Crypto Zombie's my friend. Or Crown's Crypto Cave, he's my friend. Right? What's Tone? He's my friend. I mean, there's a million of them out there that are on YouTube, just squawk, squawk, squawk. And all these subscribers are like, no, they wouldn't lead me in the wrong direction. Either they're part of the scam or they're scam themselves. And when you look in their bio, and you see a numerous amount of freaking links for leveraged exchanges and crap, and they have videos teaching people how to use leverage. Wake up. They're scamming. They're scamming you. You should never use leverage in cryptocurrency. Leverage is for non-volatile markets, not the most volatile market ever known to man. This is insane how much volatility. And if you haven't noticed lately, crypto, the disease that is cryptocurrency has a fucking funneled its way right into the traditional markets. I have seen some traditional market charts that look like shitcoin charts, and it is just funny as shit. I mean, look at SPY on Friday, for Christ's sake. Holy crap-a-rooney. And I had shit going on. I never even saw the end of the day or the dump that happened, right? I didn't do the stream Friday morning. I was busy with this electric, which is fixed. That I ended up doing. Paid a bunch of money to a couple of goofballs that didn't know more than electric than I did. Boy, was I mad. Yep, my Z-score was at about a 5th standard deviation. All right. Let's see here. Boom, boom. Yep, no div on that. So anyway, Monday morning rant. Market just opened. Let's pop over on SPY. Yeah, pre-market dumperoo. We saw that earlier. Where are we down? Like
I also wanted to mention, I just wanted to mention real quick, if I could, for new people. Like if you look up volatility trading on YouTube or on the web, you will find a lot of stuff that's garbage information because it's based on price action and they don't look at the returns. They think that volume and price action determines the volatility when clearly it's the price action that follows the volatility. And volume by itself is a neutral noise indicator. It doesn't tell you really anything unless you use it in very specific ways that nobody does usually, and certainly not with the traditional volume indicators that come with basically every chart you see. It's a garbage indicator, and the volatility information that's online mostly is garbage. There are some places like there's Tasty Trade that talks about volatility or implied volatility, but they don't talk about historical volatility and they don't correlate it. So they missed the boat also, as great as they are. Anyway.
Yeah, no, 100%. 100%.
Yeah.
And there's that 400 level, first standard deviation on the daily. So right at the beginning of the stream, just me and P-Funk, he was talking about that 400 level. I agree. We got the new weekly range. The bottom, I mean, wow, man, this thing, let's see, what do we do? Dun, 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 dun. Yeah, it's right above the 68.3 Laplace on the daily. So where the bottom of the new weekly range is. Now it's a much bigger weekly. Well, I'll tell you the truth. Yeah, a little bit bigger than last week. Jumps a, it was this Friday trending move, man. That really sent it rocket shipping. Let me see something. Pull over here. 15 minutes. Go to SPY. Here we go. Right? Is that a nice big trending move? Yeah. Look at the predictors. It's going sideways right at the top, right? Predictor flips to the downside. Entropy returns to full randomness and then wham, trend to the downside. Predictor barely flipped right here. So yeah, what's it doing? Getting that profit, man. Getting that profit. That's what it's doing. Was there div? Let's check this out. I've noticed this too. I mean, there was on the DLP. DLP actually.
I mean, 400 is right on a distribution. It's literally right on a daily distribution on two of them. Even it's on a probability projection boss, and a normal distribution right here.
Yeah, and there was div on everything. Returns oscillator, and our Fisher indicator. Not as strong, but Z-score DLP, yeah. Yep, sure did. And we had this nice wick on the 15-minute down. That's a no-brainer, because what did that leave? Yeah, it's a nasty candle, if you understand what that candle is right there. That's a nasty booger. And we know, and this is why, retail traders, they think everything backwards. It's like, we know what creates these candles. Volatility does, right? People think the candles themselves are actually telling them something. No, they're telling you what volatility is doing.
Yeah.
Telling you what volatility is doing. It's not like the candle is upon itself, right? And it's freaking the master of its destiny. No. But yeah, you get that div, and then boom, you have an outlier on the variance, outlier on Z-score. I mean, it just goes on and on. All the Fishers lock up together. Pretty powerful move. It's on the 15. Let's see what happened at the end of the week. If there's any, yeah. This is what I was seeing too. There's definitely, at least on Z-score and DLP. I mean, there's bull div. There's bull div definitely building. But yeah. And you can see it. I mean, it's all over too. Daily. It's just 4 hour. Yep, 4 hour. Same on Bitcoin too. Let's pop back over on Bitcoin. Yep. There's the 4 hour. Some nice bull div, right? And we get that after that big 4 hour candle dump, had a nice little retrace back up. Then we're getting this nice bounce on the zero mean right here. So we are. That could usually be good. The Fishers have all flipped too. DLP. Entropy is going back into randomness. This is an interesting read on the volatility. Yeah, I'll tell you what, if you on this 4 hour, you see this volatility drop off of 100% at all, price action is going to come down. Right now, volatility's pegged, positively correlated. Let's go. That's what that's telling you. But as soon as that volatility, this is what you look for. As soon as that volatility starts to contract, is what you want to see is the correlation break, start to slope back down towards a negative correlation, and that will continue a walk up. Because that ebb and flow, it can happen the other way, right? You can have a pump, and then it can start to contract and flip negative correlated. You can have the pump first, and then a walk up. And then that could ebb and flow back into another pump. So yeah, interesting stuff happening here in the 4 hour. 4 hour looks like it wants to flip around. I'll tell you that right now. NASDAQ. SPY can do its thing. Let's take a peek though. Let me pull up our correlation chart here. See what's happening. Where are you? There you are. No. There we go. All right. So right off the bat, you can see SPY and Bitcoin, 4 hour, significantly positively correlated right now. And I'm gonna be honest, Bitcoin's like making the charge. Let's see if SPY follows. You love to see that. You love to see when SPY is following Bitcoin. Hey, we made the big leagues, man. We've been in the big leagues. We've been in the big leagues. Yes. That's what's going on right now. Right? That's what these governments, they tell people, oh, crypto's a scam, blah, 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 where they're accumulating, while they're trying to get control. They'll never have control of Bitcoin like they do over this fiat money system, though. They're scared to death of it, though. I'll tell you that. They're scared of Bitcoin. That's why they're trying to, that's why all this is going on, right? Hey, we got to get in down there lower. Hey, you guys know anybody's got, let's dump this Bitcoin, blah, blah, blah. It's a scam. That's why we trade the low time frames. It doesn't matter. And every dip accumulate. That's what's great about crypto. You know, you can just set up, right? You can set up buys weekly, monthly, whatever. Doesn't matter what the price is. Just buy it. It's not going anywhere. It's not going away. It's going up. That's what it's doing. That's what it's doing. And we can look at, am I on? Yes, I am. Let's go. I want to see this nasty little quarterly. Oof. Oh my goodness gracious. Jesus. Okay. But anyway. So there was the 20K, right at the end of 2017 right here. Pull back to 31, pump to 14, pull back to 38, the scamdemic, run to the first 65K high. I think that was 60, or yeah, the first one, yeah, 62, then 65, then 70, or close, 69.5, whatever the hell was that. And now, profit taking. Profit taking. But that quarterly right there, oof, we want to backfill. Let's get back up to 45. That's what we want. Because where does it end? Right? Where does it end? It's the weekly. Yeah, everything's correlated. And these markets, man, Bitcoin and SPY, highly correlated. Monthly, weekly, daily. Daily started to go negatively correlated, but boop, here we go. So yeah, we're gonna have to see how this plays out today. We're trying to pop out of this little hole, but Bitcoin is SPY's continuing down. It looks like. But considering they are correlated. But look, right? Here's a 90-minute. Look at Bitcoin and SPY, right? Right when it opened, boom, negatively correlated. Bitcoin's going up, SPY's pulling back. You're going to see that. That's how this works. You're going to see it on all these lower time frames. You're going to see it lose its correlation. That's what you're seeing. I mean, 15-minute, boom, right when the market opened, significantly negatively correlated immediately. Okay. And so if you're wanting to trade SPY and Bitcoin together, this is what you want. You want significant positive correlation, right? If you're if you're looking at this negatively correlated, that's right. You got to figure it out. I'm not saying you can't trade them together, but you're not going to long them both. Maybe a long Bitcoin, short SPY. And we're talking about low time frame trades, scalps. That's what correlation is all about. Understanding what markets are correlated. Yes. Let's see here. Excuse me. Now, let's go over here. Yeah, this 4-hour actually looks pretty damn good. I'm just going to watch to see what happens at the close. Is this correlation going to break? Volatility going to contract? Or is this thing still going to be hot and heavy? Fully expanded volatility. It's a 90-minute just crashed. Boom. And then, boop, little pop, positively correlated. Starting to drop in the trend. Yeah, this actually looks like this thing's got some juice. Starting to have an outlier on the 90-minute. I have to look. I know the 15 was. Boom, pull back. Yeah, surprised this isn't an outlier here. Like I said before, there is no div, but man, it's the entropy's trending hard. It's definitely a trending move. Definitely a trending move. And just like I just said on the 4-hour, look, volatility was pegged at 100% up here. Bam. And now it's been contracting. The correlation broke. All right. So yeah, that's what you look for. Now, boom. As soon as we get that move, bam, now it's having an outlier now. On and off, on and off. But I could throw a projection on this, and it's probably pretty damn close. Let's see what's going on here. What's that? 1, 2, 3. Dun, dun, dun. Where are you? What? Wait. Okay, am I losing my mind right now? With main projection, with future projection.
These things are not mutually exclusive.
Oh, that's right. Dude, I'm sitting here looking for I forgot which PD I had this one we're testing up. I'm like, why is this not working, damn it? Because you have got this baby way back. This is the drag and drop one. Well, looky there. So this move on the 15-minute, man, boom. I mean, it's pegged out twice at the 99.7 Laplace right here. Right? But that's from down here before open time. Yeah, 7 in the morning and started this little run up. But I want it right. Okay. Oh, there it is. I wondered what was going on. There we go. Boom. Yes. Outlier. See, when that price action just a few minutes ago was down here, it was like 070 or whatever. It was below the 95.4 Laplace. As soon as that baby jumped up and hit it, outlier time. Sometimes you'll get that right away. These moves were a little trickier, but highly tradable moves. No doubt about that. That's why we like these projection models. Like I said, you can throw the projection on any of these outliers, you're going to see it. You're going to see it every time that you're getting a fat tail event. And here at Alpha Trading, we love fat tails. Yes, we do.
Yeah.
Wolfy like fat tails. Market got back. Let's see. Market got back, and Wolfie's here with the fat tail alert. I'm always going to go back to here. Let's see. And this is right. This works both ways. I mean, look where we're at right now on the 90-minute from the second move. We're right at the 95.4 Laplace. Outlier. So here we are. And like most of the times when people are like, well, why do these moves start and stop? Up and down, up and down. The distribution, man. The distribution. That's why. And this move down right here. Let's back that up. What is that for? PB2. Come here, you little booger. 49. No, that's not right. What the hell? Where is that one I'm using? There it is. Sorry. There we go. 12. Didn't think that was right. Whoops. One more. There we go. There we go. And this is what I like to show people. So we get this move down on the 90-minute. Is it any more obvious what's happening here? If you're watching this for the first time, second time, third time, if you're watching this on YouTube, whatever, you guys, there's a reason why we do this. This is all about probabilities and the distribution. I could throw these projection models on every damn move and you're going to see it. This move right here goes down, a wick right to the 99.7 Laplace. So if you're confused on what all this means, there was a 0.03% chance this candle was going to close outside of here, right? There was a 95.4% chance during this projection that that candle was actually going to pull up to here. That was a strong move. It just, boom, it went down, rejected off the 99.7, just held tight. But then what usually happens when you hit the outside of the distribution like that? Exactly what you're seeing. You get that reversal, right? Now I can throw this projection back here. It's probably going to show us here. Let's move that up 3. There we go. Right up to the 95.4 Laplace. Got a wick by it, right? But look on that current candle. It also went to the 95.4 Laplace, almost the second standard deviation normal distribution. But because of the probabilities before that 90-minute candle close, it literally pulled back inside the 95.4 on the projection and almost the 68.3 on the current candle, Laplace distribution. But you see how it's just probability levels. It's all math. Now this move starts at the top side, gets way outside of these probability levels, right? There was a 4.6% chance that candle was going to close out here, and it didn't. Went sideways. Now, boom, we start another move from this candle. Now we're right here again, 95.4 Laplace. And this is the main reason why we use the distribution, because we want to know what the probabilities are, right? We want to know what the probabilities are, especially if you're down here on the 5-minute or the 3-minute and the price action, right, has followed the returns up into these high probability levels. At that point, the price action is literally going to cool off, go sideways. It's going to ride the distribution level. It's going to reject. It's going to come back. It's going to mean revert. There's a lot of options. But one thing I'm not doing up here is looking for a long scalp. I'm just not. The move's over, right? The move is over. Now I'm going to let it settle down. Is it going to reject here? Am I going to see in the charts? Is there a short now, right? These are the things we're looking for. But every pullback and every new candle that opens, it gives another opportunity to bump its head up against those higher probability levels again. So, an active trading session of one of us that's been doing this for years now, it would probably be a mind-blowing experience for new traders, right? Because it's not just reading the indicators, it's the whole operation. Like I said before, you're not an algorithm. You need to learn how to trade quick. You are putting in limit orders, right? What else are you? You're not a taker anymore. If you want to be a professional trader, you're not a fucking taker. You make it, right? You're the you are making the trades, man. Right? People are marketing into your positions. Remember that. Only in an emergency. And most of the times that emergency is when a fucking trade turns around on you, because this is Bitcoin. We get great intel from this stuff. But still, Bitcoin's very volatile. And if you hadn't taken your profit and it turns around on you, you need to mark it out of that position. Maybe chase it for a few candles. If you're trading a 1 minute, right? Just chase that price action. Try to get a limit order filled to get you out of the position. But if it doesn't happen pretty quick, just market the hell out of it, right? That's the only time I'll ever use a market order, because all you got to do is look at all these wicks. I mean, you go down onto a 5 minute or something, look at all the wicks. You don't think there was an opportunity in there to get a limit order filled? Of course there was. People just get impatient, right? It's not really chasing a trade or anything. You're not going to be a taker. You're going to make the trade, right? People are going to market into your positions, in and out. Whatever you're trying to do, there's plenty of liquidity out there. And if you're using this system to trade, you can guarantee that 99% of the traders are doing exactly opposite of what you're doing.
Yep.
So the liquidity is endless. You're not going to have any freaking problem getting in and out of trades. There's always going to be a retail trader there to market right into your position. Most retail traders, that's the only button they know: market buy, market sell. They have no clue what a limit order is, what the fees are. They don't even care.
Yep.
So we do. We do care. And here we are, looking at the distribution. I mean, you show this to most new people and they're just like, what am I looking at? What MA is that? Boy, that MA makes some funny moves. Never seen an MA move like that. You got a smoothing on that? Yeah, you don't smooth the reverse mean of log returns. The reverse mean of log returns smooths you. Yes, there is no smoothing. But
I like that.
yeah, but then you start to realize, right, what's really going on in these markets. You'll be like, holy shit, what have I been doing? Is
Hey,
lovely.
I have a question.
Yes.
You see those little the little umbrella dots going out of it? Like those little lines going out, like the blue and the purple line? Like those? Yeah, like those. What
Yeah.
are those lines?
Yeah, this right here. Here, I'll show you. Let me do I have a picture of the distribution on the let me see. Wait a minute here. Let me go into the stream chat. Let me see if I got a picture of the distribution. Pretty sure I do. Because that's all you're looking at. You're looking at the distribution of returns.
The spider legs, right? That little spider legs thing?
Are you talking about all these lines?
Yeah,
Like
like all those spider legs line.
Yeah, that's literally just the Laplace distribution projections of what the distribution of returns actually looks like. And let me get this picture. Where the hell are you?
But anyway, the point is
Yeah.
of the distribution model you see on the screen there, Grand Bunny. Those lines, those blue curvy lines, right? That they look like I don't know, a cone, right? That's what we call the projection boss. And you've got the distribution bands, right? The 68.2, the 95.5, and the 99.7. Or if they're Laplace, you have the first, second, and third Laplace distribution bands there, which are very similar. But Laplace is in fact tighter than normal distribution. So it has very often you'll see a target hit at a Laplace, but not quite make it to the normal, or overshoot a normal and get to a Laplace. Laplace can very often be more accurate. That's why it's favored by low time traders, especially, and volatility traders in general, more and more. It's still not the majority, maybe, but at the big HFT firms and stuff, they know how to do this.
Yeah.
Well, those are just showing
we're
you just
seeing-
different levels.
Yeah, and we're seeing more and more use of Laplace targets being hit since the COVID dump, basically, since around March 2020, when more and more of these firms started to use this distribution model as part of their algorithm. Not because of the dump or anything, just because that's around the time they just started to shift more towards it.
Right.
But they're still both very, very relevant distribution models and highly accurate, regardless of which one you use, to be perfectly honest. And they're great. They're great distribution models. There are other distribution models, right? There's Garch and Arch and all that stuff, but we've seen these work extremely well, and that's what we're using.
Yes. But yeah, just keep tuning in. It'll start to become clear, for sure.
Yep.
Look through all the charts and the chats, and yep. And we'll be back tomorrow morning, 9 a.m.
Thanks, Phil.
Yep, you guys are
Nice
welcome.
job, man.
Yeah. Everybody have a good day.